All right, so that's basically what's coming up in a bit. Rajat Bhattacharya is with us at Standard Chartered. Rajat, good to have you on the show. Thanks for your time. Should we expect a move on the downside in the US, Rajat?
Morning. Glad to be here. I think that is what the data is telling us. And by that, I mean, we follow a statistical pattern called fractals, which shows investor diversity. The investor diversity in US equities and global equities is now so narrow that there are more buyers, a lot more buyers and very few sellers. When that happens, it's fallen below our key threshold that we watch at, and it's fallen below for both global equities and US equities, and interestingly, US high yield bonds. When that happens, there is a chance of a near-term reversal.
Rajat, hi, good morning and thanks for joining in. How are you feeling about the Indian markets now? We are heading into some large events over the next few months. Do you think that can change the course of the market? Are you starting to get a bit cautious? What's your view?
Hi, Sonia. Yeah, Indian markets have done phenomenally well, right? That's also linked to what I was saying about US markets. They've both done very well. Record highs in the US and Indian markets have, of course, set record highs. Now that leads to the valuation concerns. In India, that was always the concern, and yet we've seen they set record highs. And you mentioned earlier that NFIs have been selling, so there's a lot more demand coming in, obviously from the onshore. Now, near term, they are also the same indicator that I was talking about. The US is also flashing concerning signals, so the near term reversal. But the long-term story still remains, and that is about the extraordinary growth that India delivers in terms of earnings, in terms of economy, and you also have a government which is pushing through capital expenditure. So there is a lot of capex-driven growth that is going on, underlying growth in India, which keeps it resilient, regardless of what happens in the rest of the world.
All right. Hi, Rajat. Good morning. China's talking about trying to, fire up their economy. Yesterday as well, there were talks they're going to be adjusting their rates and hopefully something, moves out there for them. Metal prices reacted positively here. But what's your view out there? The toss-up between India and China, as you said, India's trading at the upper end. Structurally, India's looks far better. But in the near term, do you think that China stands a chance, or would you completely avoid that market?
Yeah, China looks oversold. They've been setting new lows. While India's been setting new highs, China's been setting new lows. Now, yesterday's move, for instance, China cut the bank reserve requirements, and they've now adding more to that. They're pushing their state-owned enterprises to buy back shares, for instance, and those things will help the near-term China market. There is a question of flows going on in Asia as well. You've seen outflows from China, inflows into Japan, for instance. So a lot of money is moved from China into Japan. Japan stocks are setting new highs. Now, in the near term, these measures that we saw, let's say yesterday, should help Chinese stocks recover. But we need to see a lot more. To your question about the longer term outlook for China, China is facing deflationary pressures, and mere cutting of RRR, for instance, is not going to do it. They need sustained stimulus. By that, almost they need quantitative easing measures for a prolonged period to tide away out of this deflationary pressures. So we need to see more for the long-term reversal of China markets.
All right. Okay, Rajat, we'll leave it at that. Thanks a lot for joining in. Have a great weekend. We'll slip into a quick break. On the other side of the break, our top 10 stocks lined up. Do stay tuned in.